Hi, everyone. My guest today exudes simplicity, trust, and immense knowledge. He serves as the MD and CEO of a leading fund house, is a member of the Prime Minister Economic Advisory Council, and is relentless about investor education. He's a rare personality in the boring world of finance who can make the most complex of concepts easy. No prizes for guessing who's a speaker for the day. It gives me immense pleasure to welcome Mr. Nilesh Shah once again. Thank you, sir, for your time today, and it's an absolute pleasure to have you with us today.
Thank you, Megha, for inviting me over here.
Just to set the context, this is our third episode of Market Mavens, and thank you for your continuous feedback on the same. So, my first question to you is about your family, the way you started. You have mentioned in one of your earlier interviews that you have come from a very humble background. And I must compliment your mother for raising such a strong son. Now, there are two schools of thoughts as far as psychology is concerned. First, being that to teach someone about money, teach them about scarcity. And second, also, is that when children are brought up in a very difficult situation financially, they can also become revenge shoppers. I'd like to understand from you what were the guardrails you used to be so disciplined, and why did you choose this as a career of choice?
Megha, I come from a very, let's say, Mumbai chawl background. Our houses were small, but our hearts were big. There was a movie called Katha by Sai Paranjpe, where Farooq Sheikh, Nasiruddin Sa, and Dipti Naval were there. My chawl was exactly like that chawl. Small house, big hearts, celebrating together, and always there to support each other. Uh, I have studied on scholarships. We haven't gone one day, hungry because there was always someone to step in. And I've been really blessed and lucky that I got mentors who kept on nudging me in right direction. A principal nudged me saying that I'll pay your fees as long as you top the class. Uh, you know, a chartered accountancy firm gave me 5 times more than what article will get as a stipend so that I can work hard and still earn money. When I was coming into professional career, I had a friend who was teaching me which subjects or which topics to focus upon because I was getting limited leave for my education. And I used to score much higher than him thanks to all his support. And yet, every exam, whether it's chartered accountancy, cost accountancy, company secretary, he was there to help me. When I was starting my professional career, being a gold medalist chartered accountant, I get offers from companies. And someone who had offered me a job advised me that, don't come into this boring job, go into exciting field of finance. When I was doing merchant banking and didn't like, there was a kind boss who trusted that, okay, you can go to Singapore and trade in FX market. When I came back here, instead of FX, I was put into debt market. So there are series of accidents where there was a mentor, there was a nudge who pushed me in the right direction to help me reach where I am today. So it's not just about your skill, it's also about luck. And to me, luck is if you are sincere in your job, if you are, kar bhala to ho bhala attitude, luck will always find you.
Right, sir. I totally agree. And I think, this brings out another trait of your personality, which is gratitude so strongly. We meet a lot of people by accidents and they shape us and they have a huge role to play in what we end up becoming. And I totally consent with what you are saying. Now, my next question, as a finance professional, wherever we go, whether it's a birthday or it's a funeral, the one question that often gets asked is, market kaisa lag raha hai? What is the next best step, etc. Now, I'm not going to ask you any of it, but I would like to understand from you. Give us some examples of stocks that you have already picked up early, and what was the framework or what was the thought process behind, stock selection of those particular picks that you would have had. And what are some of the most important qualitative frameworks that you strictly adhere to as far as this process is concerned?
Make I have made enough mistakes to learn from it. I have repeated some mistakes regretfully. But what has worked for us over a period of time was always the quality of management. Typically, as a thumb rule, a person below 40 and a person above 40 and below 50, 55 is in its prime entrepreneurship period. Why above 40? Some maturity has come in, recklessness has gone. Why below 50, 55? You still have fire in the belly. Now, obviously, a 20-year person can also have this ingredients, and an 80-year person also can have this ingredients. What we are looking at is a person who has vision, who has execution capability, and who is not going to shortchange minority shareholders. So wherever we have succeeded, it is largely in spotting an entrepreneur and staying with them through ups and downs. We invested in an explosive company from middle Maharashtra, from middle India in Maharashtra. Uh, it's multi-bagger for us. But essentially, the call was on the promoter who had vision, execution capability, and who was upright about corporate governance. The second thing which works well is picking up a trend. Uh, you know, Maggie was becoming 2 minute magic. The the breakfast, the lunch, the snack, they were all changing from house-made to ready-made items. And that was creating a long-term growth opportunity. From the butt heater to multiplex was a long-term trend opportunity. From cycle to two-wheeler to motor car is a long-term trend. So you try to pick up long-term trend with management whom you trust. I think that's the real combination for creating a winners.
I think what a lot of people miss is they think portfolio creation is just about connecting the winning dots. Now, most often people choose stocks which are already in the news for good reasons, when the story is known and, there are enough uh, praises written about any particular company. But as practitioners, you and I would agree to the fact that, as you very rightly said earlier, that, it's about picking a trend early, and also, if you have made a mistake, trimming that position earlier without too much of damage is done. So, what are some of the frameworks that you use at Kotak Mutual Fund to ensure that these principles are kind of managed to the T?
One, we are in the business of managing other people's money. And long back, someone had given a very good advice. नीलेश भाई वो गलती मत करिए जो मैं खुद कर सकता हूँ. As a professional, you are not supposed to make those mistakes which I am capable of making on my own. So first principle for us is to invest in real business. Can we go wrong? Of course, yes. But we should and we must put all efforts to ensure that we are investing in real business. ऐसा नहीं हो कि बिजनेस पेपर पे ही एग्जिस्ट करता है और हम लोग ने उसमें निवेश कर दिया. Second is about management. As I mentioned, getting a long-term trend and getting the right person is critical. It's like get the best car, get the best driver. You are bound to reach your destination. But how do you find that this person is the best driver? You build that confidence through interaction. You build that confidence through references. You build that contact. You build that confidence through observation. So you put a lot of effort in ensuring that you have chosen the right person. Third, there will be periods where your confidence will be shaken. Bad results, bad sectoral outlook, unforeseen events, risk which management takes. Now, in all this scenario, you'll have to do an analysis by yourself. A management obviously takes a risk because they believe it's worth taking, but you have to evaluate, is it worth or not? Many a times, despite finding the right business, right promoter, having the conviction, you still could go wrong if you don't analyze the balance sheet and the numbers. I'll give you an example. At one point of time, in one IT company, we had almost 10% stake. That company made a big acquisition. We were very happy with the management, with the acquisition, with the space in which the company was. And yet we lost about 80% of our money because when the goodwill was acquired on acquisition, it was not getting written off in P&L account. The profitability was kind of overstated, and we failed to recognize that the goodwill was not depreciating or getting written off from the P&L account, and the profit is overstretched. In the hindsight, it looks like such a stupid mistake, but we committed and lost money on it. So you really need to have the discipline of understanding the business, picking up the right management and observing them continuously, and ensuring that you are on top of their financial numbers to get the conviction to stay invested.
I totally agree, sir. Investing is not like an exact science where you're running experiments in a very controlled environment. It's dynamic and ever changing. And I'm going to just extend, this question a little further because it has a lot of importance in understanding certain basic things. Now, you often say that, be like a kunkaran as far as investing is concerned, and there is absolutely no second thoughts about, the power of long-term wealth generation by compounding. But sir, there is a practical problem as well, which a lot of our investors ask. See, for example, when they're doing investor investments for minors or for but essentially a long term, which some investors definitely do, there are a lot of changes that keep happening, even as far as the fund house or the fund manager is concerned. A fund manager may move on, the CEO may get changed, a fund house can get bought over by somebody else. There could be regulatory changes as far as recategorization, etc., is concerned. Now, while I agree that the portfolio has to be reviewed at least on an annual basis, if not more, but what are important areas we give lesser importance to while choosing that right driver to manage our money for the longer term?
So change of guard keeps on happening. If you are taking a non-stop flight, there are two sets of pilots to drive the flight. In the same flight, there's autopilot and there's humans. Within humans, there's senior pilot and a junior pilot. Now, you don't get out of the plane simply because autopilot is running or a junior pilot is running. You just stay in the plane because you believe there is a process, there is appropriate training, and there is a backup. Same thing is related to fund. Do individuals matter? Undoubtedly, yes. Every individual contributes in its unique way. But at the end of the day, we are playing symphony. If one person is missing in the orchestra, it's not going to spoil the music because it's combination of everyone's effort. What we have to focus upon, is there a process? Is there a thinking? Are the guardrails around governance appropriate? Today, in every single mutual fund, undoubtedly chief investment officers and fund managers play a role. But there is board of asset management company, there's board of trustees, there is senior management. They are all contributing to the success of business by playing their role. So don't focus too much on the musician. Focus on the music coming out of the symphony. Is it following the notes prescribed, or everyone is trying to play their notes?
Got it, sir. And I totally agree with you that it's the processes at times which we should focus more on than the person who's behind those. But sir, again, my question is about the performance part of it. Now, there are certain professions where the performance matrices are very, very different. Suppose you are doing some R&D. The performance would be checked after a very long period of time. At times, it's in hindsight. But you are in a profession where performance is quantitative, it is transparent, it is comparable, and the worst part is your performance can be measured on a day-to-day basis. Now, there are times when you know that there is a dip in NAV because of sentimental reasons and not because of fundamental reasons, but then there are influencers, there are investors who start trolling you on that. At times, the noise can be very, very overwhelming. So, how do you ensure that you remain away from that noise and keep focusing on your work? If you could share a few examples, that would really help.
When I was fund manager, to a great extent, my CEO, my sales and marketing people were the first line of defense. They will block a lot of the noise and they will only allow that noise to filter to me, which they believed was really important. I have learned pretty early in my life that I am not the smartest person. And if I listen to smart person, I become more smarter than I am. So any constructive criticism is most welcome. When I hear from market, I get sense of where I am going wrong and I can take the corrective action. There were certain credits which we should not have invested if we had listened to the market. We made those errors, learned from our mistake, and now we give due respect to constructive criticism. At the same time, in today's hyper-connected social world, there will be noise. You ignore the noise. For noise, you, I follow Mirabai's poem. ભરી બજારમાંથી હાથી ચાલ્યો જાય રાણા શ્વાન ભસે એમાં હાથીને શું થાય રાણા. So in the market, when elephant walks, dogs will keep on shouting, barking. Ignore them. But if there is a constructive criticism, then please be humble to accept it. They are your well-wishers. They have a point of view and they are pointing where you are going wrong. सुनिए सबकी, करिए अपनी. That's the philosophy we have followed. Many a times, thanks to the market intelligence, we have avoided mistake. Many a times, by ignoring noise and standing on our conviction, we have benefited. So you take judgment based on whether it's constructive criticism or noise.
Got it, sir. So my next question is again on the similar line, but with a different perspective. Now, this is about success becoming your enemy. Now, you are one of the flag bearers of Indian mutual fund industry. And if I go back in time, mutual fund used to be not given so much attention by many corporates in India. But with the kind of growth which we have seen, especially in last 6 to 7 years, everyone from prime minister to finance minister mentioning mutual fund repeatedly in their speeches make it as a place of attention. And when growth comes, you get a lot of players who start jumping into the business and they make a long tail. Now we understand that this is a business of trust, but we also do understand that when people see growth, certain non-serious players also start entering the business. Now, my only worry here is that if we have a situation where, because of an accident by a newer player or a smaller player, the trust becomes deficit in the minds of investor, would it impact this industry? So, does this kind of a scenario worry you?
So undoubtedly, Harsh, with great power comes great responsibilities. Maybe 85-90% of my investors are well informed. They can differentiate between good and bad. They can take volatility on their stride. But there are 10% investors, 15% investors who are investing on our name, our brand. They are trusting us with their dreams and aspiration. It's not money. When a widow mother is putting her money, she is giving, the liability or responsibility of managing her son's education or daughter's education. I can't be going wrong there. So in our office, we have put what is known as wish tree. And many of our clients, distributor, when we come, we ask them to write, what do you expect out of us? Someone will say you should grow up. Someone will say that you should make me grow up. Someone will say you should help me get my son's education and blah, blah, blah. Those wishes always remind us that we are custodian of someone's dream and aspirations. That keeps us grounded. Now, are there funds in which investors have lost money? Undoubtedly, yes. There are funds where we haven't done justice to investors' money. But I have to ensure that I'm connected with them and communicating with them with all earnestness, where they don't doubt my integrity, they don't doubt my sincerity. Over the years, I have seen that if you are sincere in your effort, if you have worked with discipline, and even if outcome is negative, people forgive you. There was a time at Kotak Mutual Fund when in one of our FMPs we couldn't pay on time, and there were a lot of headlines around it. We were calling every investor one by one or in group, and majority of investors said, Nilesh bhai, we trust you. Why are you taking the trouble of calling? आपके साथ इतना पैसा बना है. If you are delaying, I know there must be a reason, and we trust you. You will go and recover the money. There was an 80-year-old gentleman from Ghatkopar whom I said that, sir, अगर मैं पैसा recover नहीं कर पाया तो, and he said, कोई वांदा नहीं बेटा, तुमसे इतना पैसा बना है, ये गया तो गया, मार्केट है, ऊपर नीचे तो होता रहेगा. That is the trust which we have to maintain at all cost. Now, can this trust be damaged by someone else in the industry? Yes, it can happen. But then, as the elder statesmen of the industry, we have to come together. We came together during Templeton crisis in April 20, and we ensured that we were able to regain investors' confidence. We were able to explain the rationality and logic of what Templeton was doing as an industry, and hopefully the storm passed. So, one, we believe under guidance of SEBI, those kind of things will never happen. But if it happens, we will come together as an industry under MFI to ensure that investors' trust and confidence is maintained. The third thing which SEBI and MFI is continuously doing is to improve our governance process. Today, I have no doubt in my mind that in terms of our transparency and disclosure, we are better than the best in the world. And yet we are not stopping, we are constantly improving. So if there is discipline, process, if there is sincerity of efforts, if there is transparency, if there is boundary line set up by SEBI, then even when output is wrong, I think investors will keep their trust and faith in us and will leave no stone unturned to ensure that investors' faith is maintained at all point of time.
Absolutely, sir. And for the benefit of our viewers, I would want to add one thing here that whenever there has been a crisis situation, like Nilesh sir mentioned, Franklin, or there were other crises also, he has never been into a mudslinging. Rather, most of the senior CIOs, CEOs in this industry, they have behaved very maturely and they have defended the industry rather than blaming the other entity, and which I think is really important for this. So you mentioned about trusting the brand, and we also understand that you as a person are equally strong a brand as the fund house you represent. But there is very interesting trait about your personality, and that is likability. So you are liked by investors, you are liked by advisors. In fact, most of us call you Nilesh Bhai and not Nilesh sir. Now, one reason for this could be that there is a performance, there is a humility, there is knowledge. But I think one differentiating aspect of your personality, which we don't see in many portfolio managers, is relatability. So when we see you speaking to policymakers, you speak their language. When you speak to CEOs, you are very nuanced in understanding and explaining their businesses to them. And when you speak to a retail investor, there is a finer understanding which you do for that individual and vice versa. Now, how do you wear so many hats so effectively?
So partly, Harsh, it's an evolution. I still remember my first distributor investor meet in Franklin Templeton where I was fumbling and I couldn't even complete my presentation properly. There was a stage fright. Fortunately, over the years, I realized it was my limitation and I need to overcome that. Second, Warren Buffett very nicely mentioned that if you can't explain in one page your investment rationale, then you don't know what you're talking. My job is to build connect with my partners, my investors, my regulators, or policymakers. If I speak in my language, they're unlikely to understand it. But if I speak in their language, they are more likely to remember it. When I was debt fund manager, I still remember I used to make my presentation look intelligent by using all kind of jargons, yield steepening, yield curve flattening, duration, blah, blah, blah. When people used to go to sleep, and then I realized that it's very difficult to get money from sleeping person. I need to keep them awake. Three things else in India: Bollywood, cricket, and religion. So I started using those examples that connected with people, and there's no turning back now. If you know something, you have to simplify so that you can connect with the audience.
Oh, absolutely, sir. Even at our end, it becomes very challenging at times when we have to explain a complex subject in simpler terms. But the bigger part is that we should also understand that in simpler terms, otherwise we can't explain. So with this, we come to the end of our conversation. And since we have got this opportunity, maybe we would want to have a few rapid fires. So you mentioned about mythology, you mentioned about movies. So my first question is about that. One film that you can relate to the capital market movement, which is up and down on a regular basis.
So my favorite movie is Anand, and it teaches a way of living. Well, markets will go up and down like life, but you have to live like Anand.
And so one mythology character which you admire the most.
Sri Krishna, uh, he really epitomized truth as well as practicability. His goals were always noble, but means to achieve those goals could be sometimes shortcuts. He was always practical. As a Bhagwan Sri Krishna, he could have destroyed his enemies. Yet he moved out of Mathura to Dwarika and took the name of Ranchod Rai. जो रण छोड़ के भागा वह कृष्णा. I mean, it, he knew he had the power to kill enemies, and yet, for the greater good, he didn't mind being recognized as Ranchod Rai. So Krishna is the ultimate character.
So now coming to markets, a market which you would like to invest in other than India.
So that has changed over the period depending upon their fundamentals. But if there's an alternate to India, it is United States of America. It's a mighty nation which encourages innovation. It accepts talent from all over the world. There's no country like America in terms of talent recognition and innovation. So outside of India, US undoubtedly is your best bet.
And coming home, which fund manager outside of Kotak you would admire the most?
So there are many friends whom I admire, and I'm really blessed that I've worked with peers in many other mutual funds at the same time. So right from Madhubhai and Sunil to Prashant Jain to Naren to Vetri to Sailesh, there are so many people who are so smart, so humble, such a good human being. We talk with everyone, learn from them, and it's a great camaraderie. The best part about all this legend is that they will tell the truth. They won't go by their position. And while equity fund managers are far more visible, in the fixed income market, there's no dearth of good managers. I run what is known as valuation committee in MFI, we try to bring all issues related to debt fund in that committee for policy making. And we have such exceptional talent over there, uh, from Lakshmi and Deepak in my company to Amit Tripathi to Anil Bambole to Rahul Goswami to Amandeep when he was in fixed income fund management. Uh, all these people will do the work tirelessly. I think that camaraderie which fixed income and equity fund managers have shown in resolving industry issue, in helping policy making, is truly admirable.
Great, sir. And like I was mentioning earlier, you have practically taken the name of all your competitors and yet you have appreciated them. Sir, I would not ask you give me a tip, but one contra bet that you would want to take at this point of time.
So there are three sectors which have underperformed the market: IT, private bank, and FMCG. FMCG, I believe monsoon will be normal, and that should result into better consumption growth in India. IT, I believe order cycles will get bunched up and we will see higher volume growth in the days to come and could provide a good entry point. And private banks, they have been derated far more than the businesses impacted. I think they are good, attractive entry points. So three contra bets: IT, FMCG, and private banks.
Sir. And lastly, sir, anything which you would want our viewers to read, any content, any book which you would highly recommend?
So Harsh bhai, जितना पढ़ सकते हैं पढ़ना चाहिए. You never know when it will come handy. When my mom was pushing me to read Mahabharata and Ramayana, I never realized that it will help me in managing my life, including my professional career. Uh, I have read, you know, newspapers and magazines from the Bhelpuri wala, because in those days we didn't have enough money to buy those things. But on Kalba Devi Road, at the corner, there was a Bhelpuri wala shop which used to get all those things, and मैं उसके पास से पढ़ लेता था. जो भी पढ़ा जब भी पढ़ा सब काम में आएगा. So don't take, just one bucket of water when the whole sea is available. Keep on taking every day something. Devote at least, for an average person, 1.5 to 2 hours for reading every day.
So there's a famous quote of Charlie Munger also about Warren Buffett that somebody asked him, what does Warren do in the office? And he said, he just keeps on sitting in a chair and keeps reading hell of a lot. I think this is a common trait among all the proficient investors, be it in India or be it outside India. So with this, we come to the end of our conversation, and it was really enlightening conversation where we learned not only about your fund management practices, but also you as a person. And that really helps us because when investors can relate to you as a person, there is a high likelihood that they would understand the reasons of your picks and the reasons of the performance or underperformance at times which may come. A few learnings from this podcast. One thing which touched the note was that when you were growing up, houses were small, but hearts were big. And I think that is something which not only is what you mentioned about yourself, but it is our tradition in our country. And that is something which we would all want to carry with us. Second, if you are sincere, luck follows you. This is a very profound statement again. Third thing, which was very interesting and very different, which we normally don't hear, is that the sweet spot for an entrepreneur is 40 to 55, though that is just a quantitative aspect. But if you want to believe in the long term wealth creation, or if you want to have wealth creation in long term, pick long term trends with right management. And that is a good recipe to get success. One interesting example which I would take with me is about the flight that when you're flying in a plane, just because a senior pilot has moved to junior pilot or autopilot, you don't leave the flight midway. Be humble and accept constructive criticism. And if efforts are sincere, with the example you gave about FMP, that with sincere effort, even mistakes are forgiven by investors. Speaking the language of the listener is very, very important. You gave example of Lord Krishna where you mentioned about his ability of following truth or dharma with practicality, which is something which we should try to do. And lastly, as a lesson for all of us, the one statement which I would want to carry is that read as much as you can and try to devote 1.5 to 2 hours every day on reading, because you never know what will help you at what point of time. Plus, it'll open your mind. So with this, we end our conversation. Thank you so much for taking out time. And it was at a very short notice that you obliged. And on behalf of our investors, thank
Thank you, Harsh. Thank you, Megha, for having me over here.